Welcome back to our live series from Pat Camp on Lake Joseph in the heart of Muskoka. We're here in the backyard of Scott Paterson, who is chairman of Engagement Labs. Scott, welcome.
Thank you, James. Nice for you to be here.
Thanks. Tell me about Engagement Labs. What does it do?
Well, Engagement Labs is a company I've been behind for a number of years. We had a bit of a false start a few years ago, and then about 2.5 years ago, we really got it. We think, and we developed a product called Total Social. Incredibly unique globally. It's a technology, very proprietary, patents, millions of lines of code. And what we're able to do is tell marketers what's happening, not just online, because there are a lot of companies that are able to tell marketing companies the efficacy and the reaction to online marketing efforts, but we're able to tell them what's happening offline and the amplification of what's happening online. Sometimes they call that word of mouth. And what's interesting, in the world that we all live in, which is so inundated by everything being by our phone and everything else, but that a larger percentage of decisions are made by offline recommendations. You might get information that's online. You're checking out whatever it might be, a car, a hotel, or whatever it is. But then you'll ask your friend, you were in New York, where did you stay? You know, what airline did you take? Was that good service flying to Europe, whatever it may be? That's what Total Social does. So we've had tremendous growth. We're only focused on the Fortune 500 right now. I will apologize that I won't say company names to you, but I'm able to say things like one of the largest sports organizations in the world is a customer. One of the largest credit card companies is a customer of ours, things like that. These are customers that pay us on a SaaS basis, so software as a service. Some of them are starting at $10,000 a month. Some of them right now are $20,000 a month. Some of them are $30,000 a month. So a decent size, $250,000, $300,000 a year. Early days, but really, really encouraging.
Mm-hmm. So I guess revenue is recurring in a large percentage of the case. And what's the average lifespan of a client engagement?
It's about 2 years because it's an early new product. So a number of customers say we want to try it for a year, but we are signing 3-year contracts as well. We've had very limited churn. We did lose a large customer, which was disappointing. Frankly, their CEO and CMO were changed, and that can happen. And it's good once in a while, because we were actually having this incredible money. We get a little bit of kick in the pants, and you redouble down your efforts. But very, very pleased that there's a few contracts that I can't mention right now. We'll be announcing shortly in various industries. What gets me excited as chairman of the board is it'd be one thing to say we've got a product that really works in one sector, financial services or beauty or healthcare or something of that nature. But it looks like this product has efficacy across industries. That's what's really exciting.
And what's the methodology for measuring offline efficacy ROI for marketers?
Well, it's huge. One large mobile company in the United States credits us with increasing their revenue by $23 million. And I think our fee or our SaaS revenue in association with that customer was $250,000 for the year. So the first thing I said to our management team, of course, is, hey, you grossly undercharged them.
Sure.
But what they showed in this particular case is that mobile company thought that they were marketing to a millennial audience. But our research showed that it was actually the millennials' parents who were making the decision about whether to buy this particular mobile product for that audience. And on the basis of that mobile company designed a product for the parents.
Wow. And
it took off for them. So it's this word of mouth. Now, we do 36,000 surveys per year that contribute. 36,000, imagine that, when there's only 365
so that's
days.
Interviewing people.
It's a bit like Nielsen ratings, where people sign up to, confirming in the morning and in the afternoon. Did you talk about a hotel? Did you talk about a car? Did you talk about a mobile phone service? And it's a big business in the United States. Ours is considered scientifically sound. Our CEO, Ed Keller, is world-renowned as an expert in this word-of-mouth area. Steve Brown, who we brought in as president, he was former head of sales at New Line Jump TV, which I was formerly involved in. And the guys have done a fantastic job as we had to pivot the company and position it now for what we think represents many, many years of very rapid growth.
Mm-hmm. Okay, sounds like a ComScore almost, but with the offline component almost more effective, more holistic. So wouldn't this be something that would be kind of interest to a larger sort of multinational marketing group?
You know, I want to be very careful what I say, but it is the kind of, because it's technology and it's replicable technology, it's the kind of thing that a larger organization could plop right into their technology stack or the toolkit of their salespeople, and frankly probably grow it much faster than us. We did have the patriarch of our largest shareholder group passed away a number of months ago, and it is something the board's thinking through. What is the right outcome for this company at this point? But we, you know, in many respects, you know, we've got this thing that looks like it's got the horses ready to run out of the barn, but you've got employees and other constituents and this other factor, and we're constantly thinking through what we think is the right thing for shareholders.
Okay, so tell me a bit about the evolution of the company from an investor's perspective. The stock is at a discount to where it was. Obviously, a chairman of the company would argue that that makes it cheap, and now is a good buying opportunity. So how would you categorize the opportunity now for investors considering an investment in that space?
You know, listen, I've been fortunate enough to have some good winners, and I've got a lot of scars on my back with things that have either been a loser or took more time, and I'm certainly in the camp of this has just taken more time, and my own strong view is this represents really a compelling opportunity. And the reason is that, you know, when you go public initially with something like we did with Engagement Labs, and we had a thesis, the stocks tend to have a premium associated with the probability, the call optionality of success. When it didn't work as quickly as we'd hope, and we had to pivot to build Total Social, you get the opposite effect. And frankly, we stopped telling the story because we thought we've just got to hunker down, roll up our sleeves, and get this right. And that's what we've done. We've reduced the burn rate. We're still losing a little bit of money, but a lot less than we were before, showing that quarter-over-quarter growth, particularly when you just look at Total Social, and the quality of the customers. That's what gets me most excited, combined with a very limited churn rate. Well, now our market cap is gosh, it's in the, you know, $9-10 million range. You know, if this was a private company in Silicon Valley, I think it would trade at many times, would be worth many times what our current stock price is. But we've got to prove it, but I think you're going to see that in the next few months and quarters, and I hope that we'll see a stock price potentially many times our current stock price.
Awesome, Scott. Well, we'll keep our eye on it and come back to you soon. Thanks for joining me today.
Thank you, James.